Welcome everyone to HueFin, also known as HueFin News. Today is May 31st, 2021. You clicked on this video because you want to know what are the 3 warning signs that points to a stock market crash. But for us, our attention is focused in on the price chart, and we're going to show you all why. Because when you read articles, when you do technical indicators on your chart, everything in this space gives you nothing but confusion. And once you eradicate all of that confusion, you can actually take the bag and maintain profitability in this space better than anyone, right? So we're going to show you all that. Show you these 3 warning signs. Look at this article. I will have the link of this article, in the description of the video if you all want to continue to read it if you want. But for us, our focus is on the price chart. And we're going to give you all an update as to what our stock market crash is going to be. Are we expecting these 3 indexes to continue to go higher, or can we actually expect a crash? All right. So let's look at this article real quick. But before I do, if today's your first time ever seeing our video and you all appreciate how someone's actually is calm and sound in reasoning and not all about the hype and the FUD and the FOMO, you're more than welcome to follow us and join us. You can be a part of this community because our focus is in on price and where we're going to go. So join us. Hit the like button, share, and subscribe to the video as well. To this channel as well. So now, this article came out on the 27th of May, and it is titled, "These 3 warning signs point to the next stock market crash." All right. So now, this article is going into 3 things, and I want you to look at some of the things that we've highlighted to substantiate that if you're going to give us these 3 warning signs, but not tell us that you don't see them, then why would you even explain it? So the first warning sign is that asset prices shoot up. Duh, right? That's like obvious. In order to have a crash, you need to have prices inflate. Got it. Now, this article is only based off of one individual. So you do not need to take this to the bank, because any other analyst, any other individual could give you their own 3 other reasons or warning signs of impending stock market crash. So take this with a grain of salt, right? This is what he thinks are the 3 warning signs to a stock market crash. So he looked at 15 historical bubbles and say that they follow a broad, meaning that there's no specific pattern. It's very broad and generic. And this first warning is very generic and broad. Asset prices shoot up. Okay. In a stock market crash, this is what Paul Jackson says. Share prices double or triple over 2 to 3 years. Okay. Then they spike by another 50% in the final months. Take a look at what he says here. And I just highlighted it. But I don't actually think we're there yet. Okay, so you give us one warning sign. Asset prices shoot up. I don't know what market he's looking at, but asset prices has been shooting up. Now, maybe it hasn't shot up double or tripled in 2 or 3 years, or seen a final spike of 50%, but they have increased. But he don't think we're there yet. Okay, the second warning. Cheap credit may cause a crash. Is that a warning, or is that a probabilistic thing that needs to occur in order for us to see a crash happen? Credit is easily available, encouraging people to borrow to invest. Record low interest rates and unprecedented stimulus are definitely a cause for concern. Okay. Now, many now fear this could trigger inflation, which could crash the economy and the stock market. Again, this is the second warning sign. Cheap credit may cause a crash, but this is what Jackson talks about again. I don't think we're there yet either. It's not a healthy situation to be in, but nor is it the end of the world. So which way are you leaning? He has given us already 2 warnings. The first one, prices shoot up in assets. The second one, cheap credit. On both of them, he said they were not there yet. Okay. Third one. This is the third warning. Stock market skeptics are converted into turning into bulls or looking for the market to go all the way higher. So at this time, this is the final stage of the bubble. This is where even the doubters give up and join the mania. The herd instinct takes over, triggering a stampede to make quick money. We saw this in the recent Bitcoin crash. Okay, Bitcoin to some is now considered an asset class, right? Earlier, the first warning was asset prices shoot up. But now he's saying that we may see it in the next stock market crash too. But again, I don't think it's happening yet. Okay. So we have one warning already sound off, which is asset prices shoot up, which occurred in the Bitcoin market. But he doesn't think we're there yet. He thinks all of these three warnings are not here. I'll leave the link of this article in the description of the video if you all want to continue to read up on it. But for us, let's take a look at our prediction. Okay, the first one that we're going to look at is the NASDAQ. We told you all in our video a while back on the week of February that we were playing the strength into the market in the NASDAQ, and so far, I mean, the market has just been consolidating, and we're really pretty much break even from where we started back in February of 2021. So the NASDAQ hasn't been doing anything dramatic, right? It's been trading sideways, which is a positive thing to see in terms of what we're expecting the market to do in the long term for the NASDAQ space. I'm still looking for this market to go higher. I'm still seeing the strength here on the price chart that will substantiate that the NASDAQ has enough momentum to continue to see higher price movement. So I'm not even going to alter this prediction. I'm still expecting this market in the NASDAQ to go higher. Now, we've had our support area back here towards 12,425 points. The market came and touched that and we closed higher. So we're still on course to see the NASDAQ go higher in price. No change there. So we're going to continue to expect the market in the NASDAQ to go higher. The next market that we're going to look at is going to be the S&P 500. Okay. So let me scroll down there real quick. And this is our expectations of what we expected the market to do back in February in the S&P 500. You can see it came and topped out at our ultimate TP price around 4,200 points. Excellent job. Almost 8% profitability right there. We saw that all the way back in April. So we could get rid of it. We're there. Market came and hit it. Now the question is, where are we headed now in the S&P 500? Just like the NASDAQ, we're still seeing the strength coming through the market in the NASDAQ. Now for us, our area of support is going to be around 4,000 points, which is like another 5% drop in the market in S&P 500. Let me switch this over to the monthly real quick. Yeah, it's going to be around 4,000 points. Okay. So we're going to continue to play the strength into the market in the S&P 500. Anywhere in the green, right? We don't have anywhere historically that we can actually gauge to where the next area of restriction would be. So let's do around 4,400 points, which gives us like another 5% profitability in the market for the S&P 500. So we'll do that. 4,400 points is where we're looking for the market in the S&P 500, to go. All right, so we're there. Now let's take a look at this last index, which is the Dow. You guys can see right here that our prediction into the market in the Dow is still pretty much on point, right? I'm still seeing this market give us a lot of momentum, the ability for us to go for us to reach our ultimate TP price is still on the table, right? We did our prediction back there in April 2021. And again, we're still seeing the strength here as well. So out of all three indexes, they're still exhibiting to us strength. And as this article goes into, asset prices increases. So We're definitely seeing that right now. These three indexes are definitely giving us a lot of strength and making an all-time high seemingly almost every other week. We need to keep that into consideration, but we're going to continue to ride the market higher. We're still seeing the strength come through in the Dow. We're still expecting it to maybe hit 36,000, right? That's not too far away from where the market closed on last week. And that's it. So we didn't have to go through that whole article just to get a gist as to what the market's anticipated to do and not even realize what causes the stock market to crash. Right now, the market is still exhibiting to us strength. And that's it. So now it's your turn. What do you all think? Leave us a comment in the comment section. Make sure you maintain a profitability. And as always, trade different.